The local index looking set for a rally with green screens from Asia and Tencent, which influences the JSE via Naspers and Prosus, bouncing back. Now, traders will be waiting to hear what the Finance Minister, Enoch Godongwana, will say during the medium-term budget policy statement that's expected to take place at 2 o'clock this afternoon. Let's get a quick update now on how the JSE is performing in early trade and speak to Jimmy Moyaha, independent markets analyst. Jimmy, good morning to you. Your overview of how the local index is faring so far in early trade ahead of the mini-budget.
Morning, Toli. Morning to our viewers. JSE opened in the green, as you rightly mentioned, tracking Asia gains and tracking US session gains overnight. Tencent was up some 4%. We saw the JSE open up just over 0.5%. It's trading up almost 1% on the top 40. So looking good at the moment from the equity space. We know that all eyes, as you said, are going to be focused on that midterm budget policy statement coming out later from our finance minister. That will likely give a significant indication in terms of where we sit as an economy and the plans that the government has, particularly with some of the key areas that are in focus there.
Yeah, let's focus the attention then on that medium-term budget policy statement scheduled for 2 p.m. What are the key elements to look out for there?
Well, of course, one of the big talking points has been the state of Eskom at the stage, with Eskom looking to have the government assisted in terms of taking on some of its debt onto the government's balance sheet. Now, from a ratings perspective, a lot of the Eskom debt has already been priced in. However, if the government does then take it onto its balance sheet, we now need to look at the fact that that is going to have an impact on the debt servicing costs that the government now has, as Eskom is unable to meet their requirements on their side. So that's going to be something that's going to be hugely in focus. The energy sector is something that Moody's has been very, very heavy on around the fact that the government needs to find a more renewable and more sustainable solution for rehabilitating the energy sector, whether that's renewable energies, independent power producers, and the works, but they've made it very clear that the Eskom situation is currently unsustainable, and for those reasons, it's not likely that we'll see an upgrade anytime soon from our investment ratings as a result of that. Another key area is going to be government debt, because as we mentioned, if Eskom's debt is then taken onto the balance sheet, that's going to adjust our debt to GDP ratio. It's going to increase that debt to GDP ratio and widen that. We're also looking to see what the finance minister will say around the plans that they've put in place. Hopefully he'll touch on the measures that Treasury and the government are putting in place to avoid the grey listing of South Africa alongside the Reserve Bank's measures that they're putting in place there. We know that the public sector wage bill conversation from financial ministry perspective, they're saying that 3% is the go-ahead from their side, but unions are not likely to be happy with that, given that they started at 10%, came down to 6%. Unlikely they'll accept 3%, but we'll have to wait and see there. So that's going to be something that the minister will likely touch on there. And I think the other key area that we want to be seeing is the plans for the tax windfall that we seem to have at the moment. Year to date, tax revenues are up about 10% over expectations. And so that windfall and the use of that windfall is likely to be something that would be a very important topic, particularly if we look at how the government is going to balance its debt levels, how it's going to stimulate its growth or the growth of the economy, and what plans they have for that. So a couple of areas to look out for from the policy statement, a couple of key areas, particularly where it relates to wanting to be back in investment grade territory from a ratings agency perspective, but also a couple of areas from a growth perspective that we need to see.
Yeah, let's quickly touch on company news. Famous Brands publishing its interim financial results. How are their numbers looking?
Well, Famous Brands revenues were up some 19-odd%. Their operating profit up about 77%. They did say that their headline earnings, or their first half of the year earnings rather, were up some 120% as well. They've brought back or reintroduced an interim dividend of about 130 cents a share. So they've reported really good numbers at this stage, but they have also cautioned that the inflationary environment and the inflationary pressures on consumers and on their side from a cost perspective have resulted in them having to increase prices of foods and prices of things on their menus. But overall, positive set of results from Famous Brands, and it looks to be a good start to the second half of the year as well for them.
Let's conclude the conversation with TFG. That's the owner of Markham's, Jet and Fabiani, losing over 2.5 times more trading hours due to load shedding in the half year to September than in the prior period. That's with a total of 130,000 trading hours, Jimmy. Help us make sense of that performance.
Well, I mean, first of all, that's a dire consequence of load shedding, and that's happening across businesses throughout the country. TFG is not the first group to report on the number of hours that they've lost as a result of load shedding, and it really points to the situation that it places the corporate space in South Africa under. I mean, we know that although we mentioned earlier that we're ahead in terms of tax collections and all of that, the government has already anticipated in their February budget speech that they will be collecting less corporate taxes this year, and there's no doubt that this load shedding factor is weighing in on that, and it's going to continue to weigh in on that alongside things like inflationary pressures and that going forward. I mean, from TFG's perspective, we know that although they did report rather positive earnings and rather robust earnings, it was off of a low base. If you think back to the comparative period last year where their Australia and their UK businesses were under lockdown restrictions and weren't able to operate for some periods of time. July in South Africa was marked with the civil unrest in July as well, and that made it difficult for their South African operations to sort of find headwinds there. They did announce that their growth was up, so sales were up, group revenues were up about 23%, 17% increase in sales throughout the African continent. But we know that from South Africa's perspective, only 10% of the group's revenue or the African revenue comes from the South African businesses. And so at the moment, the headwinds that, or what they're seeing in terms of the windfall being able to sustain them is coming from their offshore businesses and coming from that low base. So once we start to return to sort of a more comparative base and a comparative figure, we'll have to see if the group is performing as well as expected. They did announce, of course, that headline earnings per share are going to be up some 8 to some 28% quite a wide range there, but we'll have to wait and see when that figure comes in at the end of the year. But they did also emphasize, of course, as I mentioned, that power cuts are continuously affecting their business alongside with or compounding to what they saw last year from the July civil unrest.
Independent markets analyst Jimmy Moyaha, thank you very much for that markets update.